As you can see the numbers here, Maria, all to the downside in a big way, of course, but off the lows, especially for the Dow here. I actually believe that it was well over 500 at one point, but finished up 419. Still, read it and weep is what you think when you look at numbers like these. All right, let's go to our Beacon Hill studio now, bring in Cosmo Macero and Neal and Associates. Cosmo, let's talk about the volatility that we thought perhaps we had left last week, but it's back this week.
Yeah, Mark, you know, poker players talk about not being able to take the swings, right? Those big, the big victories are nice, but those big losses are tough to take. That's the volatility in the market, and that's what we're seeing today. We had a big up day, now we have a real big down day. In times like this, investors and people flee to safety, like bonds, like fixed incomes, like precious metals and things like that, because they're looking for safety. That's where they go in times of high volatility like this.
You're not planning on cashing in that ring or anything? I
know no. Just illustrating for purposes of this broadcast.
Very good. I like that. All right, let's talk about this past weekend, tax-free weekend in Massachusetts. I was in some stores. I took advantage of it. I think a lot of people were there with me when I looked around. It seemed to be very crowded, but consumer confidence in Massachusetts kind of weighs against that a little bit, right?
Yeah, you know, it's kind of a triple whammy. We come off this big promotion, the sales tax holiday weekend, right?
Yep.
People are being encouraged to buy. They get that promotion off the sales tax, and then boom, consumer price index is up, prices are up, consumer confidence is down, and then another hit with the stock market. And I just bought a 50-inch flat screen.
Yeah.
Mabel, find the receipt. This thing is going back.
You have buyer's remorse.
That's right, buyer's remorse. I think people are concerned that, hey, we're being encouraged to buy.
Right.
It's a good thing to do. It's good for the economy, but it's the wrong thing for my family. And the trend is that there's no good reason for there to be confidence. There's no real good signs that this economy is going anywhere but staying flat, and maybe certainly declining further.
Well, let's talk about that, because what you're talking about there is expectations, and people want expectations. The thing I have a problem with is it seems since 08, 09, they keep pushing the benchmarks back. Well, in the second half of that year, in the first half of this year, it'll get better. It'll get better. Expectations seems to be unrealistic here.
They're unrealistic. You know, there's a little bit of a political equation here. We've been talking about the president being on vacation.
Yeah.
He has really raised expectations even on himself now, building anticipation for his jobs plan. The super committee, as part of the debt ceiling reduction agreement, the super committee and his job creation plan, it's coming out next month. So just wait, because we're going to have this plan. Well, we better see what's going to be in this. I think people are expecting some kind of a New Deal type of plan that's going to give us some real job creation. They have to have a significant amount mandated of debt reduction in there. There's a lot of expectations in that.
Certainly high expectations. And if the super committee is only super good, is that considered a downgrade?
I think you're right. If it's not, you know, it used to be okay just to be a blue ribbon commission or a select committee or a select panel. Now it has to be a super committee. Well, it better be super good or we're going to be super disappointed.
Careful how you name these things. That's what we get from that. Cosmo Macero, Neal and Associates. Thanks, Cosmo. Appreciate it.
All right, Mark.
Maria?